Welcome back to the channel. I'm Algabot, your guide to the world of automated trading strategies for MetaTrader 5. Today we're taking a close, educational look at an expert advisor called the Heikin Ashi Body Expansion Breakout. This strategy blends the smooth, filtered view of Heikin Ashi candles with a momentum expansion concept and a moving average trend filter. Over the next several minutes, we'll explore how it reads the market, how it decides to enter and exit, and we'll walk through the actual code together with a candle-by-candle example. Remember, everything here is for education only, and none of it is financial advice. Let's get started. So what exactly does this expert advisor do? At its heart, the Heikin Ashi Body Expansion Breakout is a trend momentum strategy. It is designed to continue with an existing trend rather than to fight it or predict reversals. The engine of the strategy is the Heikin Ashi candle. Unlike ordinary candles, Heikin Ashi candles are calculated from an average of the open, high, low, and close, which smooths out much of the market's noise and produces a cleaner run of colored bodies. The strategy layers three ideas on top of those smooth candles. First, a trend filter, an exponential moving average calculated on the Heikin Ashi closes, using a default period of 20. The strategy only looks for long trades when that average is rising and price is above it, and short trades when it is falling and price is below it. Second, a momentum expansion condition. The strategy watches for a single Heikin Ashi candle whose body suddenly grows far larger than the recent average, a sign that momentum has expanded. Third, a flat side requirement, which asks that the candle show little or no wick on the trend side, suggesting one side of the market held firm control. In terms of markets, this approach is generally described as suiting trending environments, foreign exchange majors, gold, or stock indices, on intraday timeframes such as the 15-minute or 1-hour chart. It runs on a single time frame, whichever one the chart is set to. Who is it suited for in an educational sense? It may interest traders who like rules-based, trend-following logic with clearly defined risk on every position. As always, this is information for study only. Trading carries real risk, and losses are a normal part of any strategy. Let's break down the mechanics step by step. The first and most important rule is timing. The strategy acts only on fully closed bars. This matters because Heikin Ashi values can repaint or change while a candle is still forming. By waiting for the bar to close, the strategy avoids acting on a signal that might disappear a moment later. On each newly closed bar, the strategy rebuilds its Heikin Ashi candles from the raw open, high, low, and close. It then evaluates three conditions in sequence. The first is the trend filter. It calculates an exponential moving average of the Heikin Ashi closes over the trend period, 20 by default, and checks both its position and its slope. An uptrend means the latest Heikin Ashi close is above the average and the average is rising. A downtrend means the close is below the average and the average is falling. If neither is true, the strategy simply stands aside. The second condition is the body expansion or ignition test. The strategy measures the size of the just closed Heikin Ashi body and compares it to the average body over the prior 10 candles. The new body must be at least the expansion multiple, 1.8 by default, times that average. This filters out ordinary candles and looks only for a genuine surge in momentum. The third condition is the flat side. For a long, the candle must be bullish with a lower wick no larger than the flat fraction, 20%, of its total range, a flat bottom. For a short, the candle must be bearish with an equally small upper wick, a flat top. So a long signal needs an uptrend plus a bullish flat bottom expansion candle, and a short signal needs a downtrend plus a bearish flat top expansion candle. When a signal appears, risk is defined immediately. The stop loss is placed beyond the ignition candle's Heikin Ashi extreme, offset by the average true range stop multiple times the 14-period average true range. The distance from entry to that stop becomes the trade's risk, and the take profit is set at a fixed reward-to-risk multiple, 1.8, of that same distance. Finally, an optional trend exit can close a trade early if the Heikin Ashi color flips against it, and the strategy holds only one position at a time while respecting a maximum spread filter before any entry. Let's look at the actual MQL5 code the expert advisor runs, styled here as you'd see it in MetaEditor. At the top are the input parameters. TrendEma, defaulting to 20, sets the moving average period on the Heikin Ashi closes. Body loopback, 10, is how many candles feed the average body size. Expand multiple, 1.8, is the body expansion multiple. Flat frac, 0.2, caps the wick on the flat side. ATR period and ATR stop govern the stop distance. Reward risk sets the target at 1.8 times risk, and use trend exit switches the early color flip exit on or off. Below the inputs are the two signal blocks. The long block reads, if trend up and last bull, and the lower wick is at most flat frac times the range. When all three are true, it reads the ask price as entry, sets the stop below the Heikin Ashi low minus ATR stop times ADR, computes the risk, and if that risk is positive, sets the take profit at entry plus reward risk times risk before calling trade.buy. The short block mirrors it exactly. If trend down and last bear, and the upper wick is at most flat frac times the range. It takes the bid as entry, sets the stop above the Heikin Ashi high plus ATR stop times ATR, and places the take profit at entry minus reward risk times risk, then calls trade.sell. Notice how both sides carry a fully defined stop and target the very moment the order is sent, so every trade has a known reward-to-risk profile from the start. Let's bring the strategy to life with a candle-by-candle illustration. On screen, you can see a series of Heikin Ashi candles, and the blue line running through them is the 20-period exponential moving average, calculated on the Heikin Ashi closes. That blue line is the strategy's trend filter, and its slope matters just as much as its position. Starting on the left, notice the first few candles. They are gently bullish, each printing a modest body, and price is holding above the rising blue average. This is exactly the healthy, steady trend the strategy wants to see before it considers anything. The moving average is sloping upward, and the Heikin Ashi closes sit above it, so the uptrend condition is satisfied. But a rising trend alone is not enough. The strategy is patient. It measures the size of each of these small bodies and keeps a running average over the prior 10 candles. Now watch the fifth candle. Something changes. This candle prints a body far larger than the quiet ones before it, comfortably more than 1.8 times the recent average body size. That is the body expansion, or ignition, condition being met. Just as importantly, look at the base of that candle. There is almost no lower wick. The bottom is flat. The strategy requires that flat bottom to be no more than 20% of the candle's full range, confirming that buyers held control from open to close without being pushed back. Uptrend, an oversized bullish body, and a flat bottom all line up, so the buy entry marker appears. Entry is taken at the ask once the candle has fully closed, because Heikin Ashi values can repaint while a bar is still forming. With the position open, the strategy places its protective stop just beyond the ignition candle's Heikin Ashi low, pushed a little further out by 0.7 times the 14-period average true range. That distance from entry to the stop becomes the trade's defined risk. The take profit is then set at a fixed reward-to-risk multiple of 1.8, so the target sits well above entry. Follow the next two candles. Momentum carries through, the bullish bodies continue, and price advances up into the take-profit target, closing the long trade at its planned objective for this illustration. Now the character of the market shifts. After the peak, the candles begin to change color. A bearish Heikin Ashi candle appears, and the blue moving average rolls over and starts to slope downward. Price slips below the falling average, so the downtrend condition is now satisfied. Again, the strategy waits through a few small, quiet bearish candles, measuring their average body size. Then look at the 12th candle. It expands sharply to the downside, printing a bearish body many times larger than the recent average and clearing that same 1.8 multiple. This time the flat side is at the top. There is virtually no upper wick, showing sellers were in control from the very open. Downtrend, an oversized bearish body, and a flat top together complete the short setup, and the sell entry marker appears at the bid on the close. The mirror image risk logic now applies. The stop is placed just above the ignition candle's Heikin Ashi high, again offset by the average true range buffer, and the take profit sits below entry at that same reward-to-risk distance. The final two candles push lower, the bearish momentum continues, and price reaches the take profit target, closing the short. And remember the optional trend exit. If the Heikin Ashi color had flipped against either of these trades before the target was reached, the strategy could close early on that color change, aiming to protect the move rather than wait for the full stop. That is the complete cycle: trend, expansion, a flat side, defined risk, and a managed exit. That brings us to the end of our educational walkthrough of the Heikin Ashi Body Expansion Breakout Expert Advisor. We covered how it smooths price with Heikin Ashi candles, how it filters trend with an exponential moving average, how it detects a body expansion candle with a flat trend side, and how it defines risk with an average true range stop and a fixed reward to risk target. We also stepped through the code and a candle-by-candle example of both a long and a short trade. If you found this analysis helpful, please like the video, leave a comment with any strategy you'd like me to break down next, and subscribe for more MetaTrader 5 strategy analyses. You can find more educational content at www.algobot.live. Remember, this video is educational information only and not financial advice. Past performance does not guarantee future results. Trade responsibly.